So thank you for attending and welcome to Trellis's Spring Forward series powered by our strategic certified partners. This webinar is just one of 5 sessions over the next 2 weeks to help you accelerate your credit union growth. Please note the session will be recorded and the phone lines will be muted. For any questions, please use our chat feature and we'll address your questions at the end of the webinar today. My name is Denise Marcinski. I'm the Senior Partner Manager at Trellis. We developed our partner program, if you're not aware, about 2 years ago, with the goal of adding value to our credit union clients through our partner solutions. Today's featured partner is Profit Resources, and they specialize in profitability software and consulting to help clients magnify the profit of their member account holders, products, officers, and branches. Profit Resources will be sharing with you today the profit plan, 4 proven strategies to increase your profits. So this is going to be awesome. Now, please allow me to introduce today's speakers. First up, we have Jean Palm, the President and COO of Profit Resources. With a background in database marketing and finance, Jean has a deep understanding of profitability modeling and how profitability data can be integrated within a marketing database to increase a credit union's profits. Very important. He has served as a vice president of marketing for a financial institution, as a senior financial analyst at Harland in their database marketing division, and he has written numerous articles on profitability and marketing for national periodicals. Next up, we have Alicia Johnson, Chief Growth Officer of Ideal Credit Union, and she's joining us today with over 33 years of experience in the financial services industry and has been with Ideal Credit Union for over 12 years. Alicia directs the delivery of marketing, sales, and service through all delivery channels at Ideal, branch, contact center, wealth advisors, business services, digital branch, and social media, ensuring consistency with Ideal Credit Union's vision and mission. And then next up, we have Ellen Boyd. She's the Business Intelligence and Reporting Manager at Ideal Credit Union. She has been with Ideal for almost 14 years. In her role, Ellen manages the data warehouse, M360, and she also supports the entire organization with their analytics and reporting needs. Just a small task at Ideal, right? So anyway, without further ado, I would like to introduce Jean Palm, President and COO of Profit Resources. Take it away, Jean.
Thanks so much, everyone. Thanks for your time today. And we're going to get started right here. When we're talking about profitability, the main thing involved with all of this in developing a strategy is you really do need to have a way to calculate the profitability of your members and your products. And this will really give you a great foundation for these strategies. But what we found out there over the years is there's really a problem. Most credit unions don't know how profitable their members and their products are. And it's not that they don't have good equipment and good systems. They have really good data processing systems. They have really good general ledger systems. But these things aren't set up to really talk to each other. For instance, with the data processing systems, you can have things like, well, here's Mr. Smith's indirect auto loan, and you can look at the balances and the payments and the interest rate, all that type of stuff that's there, very, very transaction oriented. And over here on the general ledger, you can have things like, well, here is the year-to-date interest income that we made on all of the indirect auto loans. But what you don't have is a way for them to say, well, then how much did Mr. Smith make the credit union last year on his particular account? So figuring that at the account level has been a real problem. And that's why the majority of credit unions really haven't done this. It's difficult to do. There is another problem out there, and that is that the profitability systems in the market are really expensive. They're highly specialized. They're usually designed to do one thing in particular. There's not a whole lot of integration out there. And because of that, it's really hard to find out the answers to everything that you need. The other thing that's hard about this is that these systems, once they're sold, it's typically left up to the credit union to be able to set them up and to maintain them. And that's a real cost. It's a hidden cost, but it takes a lot of time from finance to do this. There's a lot of IT integration that happens with these things. Where I was at, the shop I was at, it took the CFO about a year to set up a profitability system. And he also had a programmer to help him out with that. So as we've been thinking about this over the years, we've been thinking, wouldn't it be great if there was a better mousetrap? And really where you didn't have to install complex and expensive profitability software, you didn't have to set up and maintain the system, and this member and product profitability was readily available to everyone in the credit union. Well, now you can do this, and you can do this with a combination of M360 and Profit Magnifier. So Profit Magnifier is our profitability software. It can do a lot of different things, and it's web enabled. It's a profitability executive dashboard. It's a business development tool. And it's also has a what if analysis for loan officers and a database marketing tool for marketers. And I realize that on the call today, you may already have a profitability system. And if so, you're way, way ahead of your competition. So some of the illustrations I'll be saying today are coming from Profit Magnifier. But if you have your own system, then this would be a great thing just to be able to think about, hey, how can I use some of these ideas inside of my own system? So we really want to make this as educational as possible for you. The way that this thing works is that we get inputs from M360. That's the source of data used within the program. M360 has what is called quick connects. They're predetermined sets of data that have been queried from M360. We use a combination of 4 of them. There's one for the general ledger data, there's one for loan account data, another one for deposit account data, and then there's some name and address data that we use. We utilize a state-of-the-art technology process, a lot of industry best practices to calculate the profitability components of each account. So when we're taking a look at that, it gets everything down to the account level. So we're looking at the net interest income, the non-interest income, the non-interest expense, the provision expense, and the net income for every account that the credit union has. And that is very complex. No matter what the system you have, it's very complex. It's called a cost accounting system. The output itself is very, very easy to use. We have a web-enabled executive dashboard that's really designed to do what it says, and that's to magnify your credit union's profits. So when we're taking a look at this, we're looking at these strategies. Once you have a good foundation and you have profitability that you can calculate at the account level, what kind of things can you do with it? And the very first strategy we're going to talk about is to retain and deepen your relationships with your most profitable members. Now, this is the most important thing that you can do with any profitability system. And the reason is that these members already exist, but you may not know who they are yet until you go through this exercise. So it's a matter of getting to know who these folks are to begin with, and then having a strategy of, well, now that you know who they are, what are we going to do to deepen those relationships, and what does that involve? So let me just show you something here, very standard thing that we've seen over the years, and that is that typically about 20% of your members are generating all of your profits. You might have heard the 80-20 rule, or the idea that, well, 20% of the people are doing 80% of all the work and heavy lifting. Well, in this case, 20% of your members are doing all of the heavy lifting of the whole place. Everyone else is a drain on profitability. So when you're looking at this, it's really important to think about in terms of how do you reach out to these folks, and what do these folks look like compared to everyone else? So what we'll look at here is reaching out to these folks involves a lot of one-on-one effort, and reaching out to these folks involves having some kind of automated tools, because you can't reach all of these one-on-one, but you can with these. So what does that look like? How do you go about doing that? Well, we have a tool in Profit Magnifier called Profit Mining. And what we're looking at here is this is the top 1% most profitable households. Now, what we've done inside of our system, and this is very common inside of database marketing systems, is we've householded the data. What we mean by that is that if Mr. Smith has 3 different accounts and he has a member number, and Mrs. Smith has 2 or 3 different accounts and a different member number, but they both live at the same address, then it's going to be householded into the Smith household. And that really concentrates your marketing efforts and your targeting efforts on that. So what we're seeing here is there's 116 of them. So not that many. And this particular institution has tens of thousands of account holders. So we can take a look at this very small number here. When you take a look at a report, you find out, well, here are the folks here. This is what they look like, the member number, name, and so forth, and all the way to the profit. Then you can start thinking, well, how do you reach out to these folks? And we highly recommend that at the top 100 most profitable members, that you have personal bankers that are reaching out to these folks. And it's all about relationship. And that's why this takes time. So what you're looking at is, how do you get to know these people's companies? How do you get to know their families? What are things that you can do as a credit union to make these individuals or these companies more wealthy? What are some things you can do to add more value to them and with the products that you have? So again, this does take time, but the impact of that is incredible. Now, on these, you're always going to find some folks, I call these dangerous members, because what you'll always find is that there's some people at the very top and they only have one thing with you. So these are the folks that are not really well connected to you guys. And it behooves you to really, again, develop the relationships that you have with these folks. Now, what you can also do is you can find out what they have with you as far as services and what they don't have. So in this case, we can find out that with these particular commercial members, there's a tremendous opportunity to cross-sell some business checking to them. So if you did this type of thing, and we have a lot of stats to prove the impact of it, the thing that's amazing is if you take a look at even a 1 year's time span and take a look at, say, these top 116 households, and what did they buy? You'll usually find that maybe 20 or 30 of them bought something from you that year. And the bottom line on profits is stunning. Those people just having 20, 30 different sales during the year could end up generating tens of millions of dollars of loan business and deposit business, and they could generate hundreds of thousands of dollars of additional profits to the credit union. So again, if there's nothing else comes out of today's talk, if you can find out who the most profitable members are that you have and deepen those relationships, there is a tremendous, tremendous amount of income that you could make and make these people more valuable at the same time. So it really is a true win for everybody. Now, the second strategy is really interesting, because what you can do is you can add more members who look like your most profitable members. So how do you go about doing that? Well, what you need to have is some way, again, of taking a look at these members through a variety of different lenses. So in our case, what we'll be doing is we'll take a look at unprofitable households, and they have low balances, and they also have a high net worth. Now, these are the best customers somewhere else. So we'll start with this. This is our profitability modeling. And in this institution, there was about 14,000 households that were unprofitable. Now, using the data from M360, we can also say, well, gee, the reason that they're unprofitable is they don't have anything with you. Their total balances, total loans, total deposits, less than $1,000. So that's readily available right out of M360. But what we can also do is we can add demographics. Now, demographics are appended to these households. There's a number of different companies that do that. We use a company called Axiom Corporation, and they have modeled a lot of demographic data on the American population. And it's really spooky how much information is out there that you can purchase and append to your members. So in this case, what we've done is we've appended 20 different demographic variables, and one of them is net worth. So when we're looking at this, when everything is said and done, there are between 1,500 and 1,600 households that fit this query. And the really cool thing about this is that from a marketing standpoint, this is what's called guerrilla marketing. This is guerrilla marketing at its finest, because what you can do is basically pick off all of your competitors' best customers. So you can query this by branch if you wanted to. The branch managers can take a look at this and invite some of these people to lunch. So really the world is your oyster when you have something like this. And this is something that's just very, very powerful. So it just shows you an idea. How do you go about getting more profitable members from members that you already have? The third strategy really gets into what you're selling. And for decades upon decades, it's very, very common to see a credit union sell its worst products to its members without even knowing. So it's very common out there. We see that where a product can be very unprofitable, and yet the credit union keeps selling it, and because they don't know any different. So with this, what we'll be doing is taking a look at the profitability of the products. Now, we've already taken a look at the profitability of the members, and this is just another way of cutting into the data. So what we're doing is we're adding up the profitability of all the accounts in different product portfolios, and then we can take a look at the services that those products are related to. So in this illustration, what we're looking at here is the deposit services and their profitability. Now, this is a very special cut of the data. Typically, what you'll see in these profitability systems is that they will balance everything back to the general ledger at a certain point in time. And now we do that too, but we take this a step further. If you balance everything back to the income statement at a point in time, you're using all of the expenses of the credit union. So you're looking at the boardroom, you're looking at all of the branches, the physical branches, all the personnel in the branches and the like. And if you stop there, then one of the unintended consequences of that kind of a study is you would take a look at your checking products, for instance, and they'll all cost you about $200 to $300 a year to maintain. And the credit union needs the balances from the checking products in order to fund its loans. But it's very discouraging to take a look at this and say, well, gosh, every time I add on another checking account for this place, I'm losing the credit union money. Well, are you? Because every time you add another checking account, you're not adding on more buildings and more people. You're only adding on incremental costs, like some processing costs and the like. So when you're calculating the additional profit that you're generating, we call it incremental profit. And when you take out the fixed costs of booking a new account, whether it's a deposit account or a loan account, it really changes the equation. So it's kind of like looking through the windshield of a car and seeing where you can go instead of looking in the rear view mirror and seeing where you've been. So this is a radical way of looking at this. And this is really where you start combining the disciplines of cost accounting with database marketing techniques. And it makes a world of difference to take a look at this, so you can see which things you should be selling going forward. The last strategy is really important because what you're looking at is how do you cross-sell your least profitable members your most profitable products so they become more profitable. So remember that graph we showed you earlier on where there were 80% of the members that were unprofitable. So what you need to do is, well, how do you reach out to that group and how do you make them more profitable? And they may not look like your most profitable, like what we saw before. They may not be really wealthy, but what can you do to increase the profitability there? So let's take a look at that. What you can do is you can use this tool again, this profit mining tool. And in this case, what we're doing is we're looking at unprofitable households who do not have a mortgage with you, but they own a house. The house is worth more than $100,000 and they have income greater than $50,000. Now, in taking a look at that, the unprofitable households, again, we're looking at about 14,000 of them. Now, if we were to take a look and say, well, how many of them don't have a mortgage with you, then it takes it down a little bit, not too much. But if we were to take a look at some demographics and say, well, who actually owns a house? They don't have a mortgage with you, but they own a house, and there's 8,700 of them. And we can go even further. We can take a look at their home value of being $150,000 or more. And this is actually, we were joking about it the other day, it probably should be twice that. This is a couple of years old. So housing has gone up quite a bit. But in this instance, yeah, it's 5,700 or so of those. And then you can take a look at their income of $50,000 or more as an illustration. So what we're looking at here are 4,200 prospects that are available for that. And we all know that you're not going to close all 4,200 of them. But for instance, if you could just close 1% of this, so 40 of your members, and you sent this out, typically speaking, the mortgage will generate about $1,200 of profitability in its first year when you keep it on the books. And if you keep it on the books multiple years, obviously it's even more valuable. So if you're taking a look at that, and even if you had 40 of these things at $1,200 a pop, that's still $48,000, close to 50 grand that you could make just on this one query. So it does show you just the incredible things that you can do with profitability, some of the things you can do strategically on that with just different tools that you have available. And so if you can use the data from M360, if you have a profitability modeling tool, and if you have demographics, you can do so much with this. So I've talked a lot about strategically how you go about using profitability data to increase the profits of the credit union. And we're really honored today to have one of our clients on the call. Ideal Credit Union has been a client of ours for 21 years. It's been a phenomenal relationship. We really enjoyed working with these folks. And what we're going to do is going to transition from a strategic high level to getting into some more tactical ways of things that they've developed over the years. And then finally, the reporting structures, the real nitty gritty of how do they go about putting all of this data together to accomplish the tactics that they have. So without further ado, I'm going to introduce to you Alicia. And again, many, many thanks just for your time and interest today. We do appreciate that.
Thanks, Gene. That was great information and a good transition. We've gone from the high-level strategy and all of the opportunities that have been identified in Gene's presentation. And I'd like to share with you how we at Ideal Credit Union use that information. And at the end of my presentation, I'll hand it off to Ellen, and Ellen will show you how she gets to that information that allows us to present these opportunities to our members. Specific to my presentation this morning, I'd like to share 3 different initiatives at Ideal Credit Union. The first is our VIP Plus program, and then I'd like to share some of the things marketing is doing with the information that we're pulling both from M360 and the Profit Magnifier, as well as how that information is being used in our front offices by our branch banking staff. So as we transition to the VIP Plus program, in 2012, 2013, we were talking about share of wallet. It was a strategic initiative. How do we maximize share of wallet? And to go back to Gene's comment, not all products are created equal. And oftentimes, the more products a member has, if they're the wrong unprofitable products, they become even more unprofitable. So using our profitability information, we highlighted these 4 C's that were important for us at this time. And the 4 C's are CAR, credit card, CASA, and checking. At certain times, for example, before the COVID pandemic hit, liquidity was an issue. We added a 5th C, which was cash, and that referred to money market and savings at that time. But these are the 4 most profitable products. And what we wanted to do with these 4 profitable products is reward our members. Similar to what Gene talked about in his first strategy of identifying the profitable members, but then selling more profitable products to those profitable members. So we talked in terms of C's, and that we identified the 4 C's and we rewarded them with a patronage dividend at the end of the year. But we also, all throughout the years, have talked about 2 C's and 3 C's and helped our members to understand by layering in 1 more C, they can leverage and increase the amount of payout they receive every year. But one of the things I would like to draw to your attention is what makes the products profitable isn't just the information that we pull from Profit Magnifier. It also is what that product means to the member. So at Ideal, our goal is to focus on helping our members make more money with their investments, helping them save more money with the loans, and also layering in added convenience with the tech products that we have available. The first of the C's is our car vehicle financing, and it represents not only car, we also do rec vehicles. And noting that all products are not created equal, when we take a look at that car vehicle financing, first off, we earn interest income. We also earn non-interest income. We have a guaranteed asset protection program, the GAP, and we also offer mechanical breakdown coverage, and we have payment protection. Payment protection is debt cancellation. Debt cancellation during COVID was a great product to have available for our members, and we're always pleased to help our members with a payout. Oftentimes they lost their jobs, they weren't able to work, and this payment protection allowed them to continue to drive their vehicle and not be able to make payments. The payment protection kicked in and made those payments for them. So it really is a win-win. Yes, it's non-interest income, but it's also a definite benefit to your membership that chooses to purchase that product. But those pieces all coming together are part of what makes our car vehicle financing as profitable as it is, and one of the 4 important C's at Ideal Credit Union. The second is our credit card. And recognizing that your credit card equals purchasing power, it enables members to buy products that they may not be able to afford today. They can finance it over time. So the reason this product is profitable is not only the purchasing power, but it's also its ability to generate interest income, as well as non-interest income in terms of fees, when there are some fees that are charged or paid by the member. And then also, very importantly, that interchange income. Interchange income is a fee and income source that is paid by the retailers that accept the card. So again, it's a win-win for the credit union as well as the member. Comes back down to the purchasing power is the benefit to the member, but it is a very important C in our 4C suite of products. Our third C is our mortgage. And Jean was just providing some excellent information on the mortgage and the dollars that it generates to the member. I'm sorry, the dollars it generates to the financial, but it's also a tremendous benefit to our members. And from our C standpoint, we went with CASA, and that C represents not only mortgages, but it also represents home equity lines. I don't know what your marketplace is like, but our marketplace, when we hear from our head of mortgage, there's just no inventory. We have a lot of members that are approved for loans that are out there looking for their dream property and they're struggling to find it. Or they're making offers and they're bidding 75,000 over ask and they're still not getting it. So there's a lot that's going on in the marketplace that's influencing this C. And it's one of the reasons why home equity has become so important. We've seen a lot of members that have transitioned from a mortgage to instead deciding to refi or add on to their current house and turn their current house into their dream house. So we've seen that a lot. But this loan being the most long-term loan a member will most likely take in the course of their life, it does create a loyal member for life. If you treat the process and the mortgage and the member properly, this can be one of your best loans, not just from a profitability standpoint, but also from a loyal member for life standpoint. The other thing that mortgage loans and home equity loans do generate for the credit union is interest income. And then there is some non-interest income also. At the time the loan is booked, there are a lot of fees that are charged, not only by the credit union, but just in general, what you have to pay to the state when you're booking the loan, et cetera. So this particular loan, long-term loan, interest income, non-interest income. So I think you can see why this is one of the important C's. At Ideal, we also service these loans. So some they may sell to Fannie Mae, but we do continue to service and maintain that relationship with the members. They also, as this has been great during COVID forbearance, being able to work with the members to assist them and in bad times to make their payments or help them with whatever they need. So it's really been a great loan that has contributed to the success of Ideal Credit Union. And our fourth C is checking. And I think Jean also mentioned, free checking. I'm asked frequently, how do you make money with free checking? Well, the first thing to note is checking is an inexpensive source of funds. And it also is the determinant of the primary financial institution, PFI, and a strong PFI score results in referrals and loyalty. We survey our members often, and they will primarily tell us what brought them into the credit union was a referral from a family member, a referral from a friend, just a referral in general, telling them, oh, we did a great job for them, which is wonderful to hear. We also take that negative feedback. When someone says we didn't do a good job, we will work to make things better. But that PFI determinant goes hand in hand with the checking account, most likely because you have so much interaction with checking account holders. The other thing that checking will generate is for those of you that have an overdraft protection program, ODP generates a lot of fees with checking. I know it's a hot topic with the CFPB right now. We're watching it very carefully and looking at some pricing changes, but as it is today, it is a large source of income, again, that's tied to checking accounts and non-interest income. Also, another program that is specific at Ideal Credit Union, we have a rewards debit card. So that also generates non-interest income and it provides rewards outside of credit union products. We have a cell phone screen protector. I can tell you I've made 2 submissions to have that replaced. Also tow, and I take advantage of that tow benefit, as well as a medical benefit. It's a great program. There are some merchant funded opportunities as well. So this in general makes a checking account more valuable to us. And it's a wonderful differentiator that we are able to offer our membership. One of the most popular pieces of it is a $500 no interest loan that they can tap into at any time and pay back at the end of the month. So it has been a very great and rewarding program for us and to have available to our members. And again, checking accounts, source of fee income, stop payments, whatever it may be, you can see most of them are tied to checking accounts. And then again, the debit card interchange. Debit card interchange is key as fewer and fewer members are writing checks and more members are using their cards, or even they've transitioned with their contactless plastics to the mobile wallet. It is a source of interchange income, which is very beneficial to the credit union. So with those 4 products in mind, we have identified our 4C members, and on an annual basis, we pay out a dividend, either for a deposit dividend or a loan dividend, just to reward our members who are helping us to make money. And again, Ellen will give you more information on the hows and the specifics of the whys, but I wanted to give you some background as to how we've used the profitability information, what we see as profitable, and then how we've rewarded our members using those 4 C's, and also use those 4 C's to grow our membership base. The next thing I'd like to transition into is marketing. When we take a look at the marketing tactics that we use at Ideal to drive growth, we rely heavily on trigger marketing programs. Starting with a life cycle marketing program, Jean had mentioned Axiom data. We use Claritas data. It's similar to Axiom data, but we try to identify what products they have elsewhere based on those scores. And then we have programs using marketing automation that sends that messaging to those members. We use email messaging at Ideal as well as direct mail. And in using those direct mail, we try to target the images that are used in the marketing to mirror the member that is receiving the offer. So we use that heavily. On average, we send about 1.5 to 2 million messages a year. Now, with that said, I, Alicia Johnson, am not receiving 1.5 million messages. We have a lot of filters in place to be very targeted in our mailing. Our goal is to send the right message to the right person at the right time. Another program that's utilized to send the right message at the right time is our onboarding program. When we get new members, new mortgage members, and new indirect lending members, we have onboarding programs that are in place. These programs are built specific with using M360. And the reason we did that is because we want to send these messages immediately. M360 is real-time update. So we send 28 potential members to our members over a 12-month period. So welcoming the member immediately, that one goes out the next day, or with their mortgage, or specific to their vehicle with the indirect loans. So we're very targeted in our discussions and targeted in introducing products, making them aware of what we have. We use marketing paths, so the messages are sent up to 3 times and it notices that they've been opened. And we also have rules in place that ensure members only receive up to 3 messages a month, because again, we don't want to inundate them with too many messages. And then new in the last 2 years, we've begun to use predictive analytics. And predictive analytics has been very beneficial. Similar to what Jean said, we are able to dig through the information in our database and identify members with loans elsewhere, mortgages elsewhere. I also can get down to the purchase behavior. I could tell you the purchasing power of people that are drinking Starbucks, Dunn Brothers, and Caribou coffee, if you have those in your marketplace. It's really, really interesting to dig into. The data geek in me loves it. But it's great information, to provide the right message to the right member at the right time in hopes of presenting an opportunity that's of interest to them. Now, transitioning from marketing to branch banking, our front line actively uses M360 every day to review key performance categories. Using the 4 Ps and the profitable product information, we set sales goals every year. Sales goals are broken down into quarters, or actually start with annually, and then we break it down to quarter, break it down to month, and break it down to week. And we manage weekly by branch, by salesperson. Having these conversations, we're able to work with our staff and have sales conversations to discuss what it is they're talking to members about, if they're meeting their goals, what meeting their goals looks like, and really coaching. And that coaching is more of a profile. We are not a product pushing organization. It may sound like we are based on the fact I told you I just broke down everything by day, what they are supposed to sell or what they're supposed to be talking about, but we're seeing a lot of members, and in seeing those members, our goal is to profile them, talk about what they need, what they have, what they're looking for, and what their future needs may be, and then present opportunities to them. Our goal is 100% present. show them what we have, tell them how we can save them money, make them more money, or provide added convenience. Again, using real-time information from M360 and layering in the profitability information that we have had. The second piece is our managers also, they meet with staff once a week. So they meet with staff once a week. They have one-on-one meetings before they meet to talk about a loan. They pre-plan for the loan. What does the member need? What's the best way that we can assist them? We try to get them the best rate possible. Our goal is to save them money and make them very happy, satisfied with the loan. But also we will present those other products I mentioned earlier, the GAP, the MRC, and especially the payment protection, because we've seen great success for our members that have utilized those products. We try to solve by term. So it's not a pricing issue specifically. We'll just lengthen the term if it's a product they're interested in, so that the price of their payment is always the same. The third piece we do is also, and we've layered these on this year, is our outbound calling program. We focus on loan pre-approvals. Our members have loans elsewhere using the predictive analytics. We also have an LOS, which is a loan system that we approve loans, but they're not always funded because members are out there looking for loans. So we've got outbound calling just to see how they're doing, if they found the loan they're looking for, and letting them know those dollars are available for their vehicle financing. We reach out to all of our indirect members. That program has started this year just to welcome them. When they walked into the dealership that day, they walked in to buy a vehicle, not to buy a credit union. So we just want to help them make a payment and give them all the information they need to set them up and welcome them to the credit union. And then we do a welcome to the new members, as I mentioned in the onboarding. So these are all the tactics that we're using. I'm going to transition it to Ellen, and she is going to walk you through the information she uses to send to the front line in M360 in order to really fully utilize our information. Ellen?
Thank you, Alicia. I'd like to start out by explaining how we have our department and area set up here at Ideal. So starting with myself, as stated, I am the Business Intelligence and Reporting Manager at the credit union. I have one person that works under me, and he does more of the day-to-day reporting, spreadsheets. He helps field questions from our branch staff as well. And then I report to Jane, who's our VP of Marketing, who then reports to Alicia, who you just heard from. So that's how we have it set up here to make this all work. And then as stated, we do use M360 for our data warehouse. We have been on M360 for a long time, so we have a lot of data in there and feeding into the reports. We have a lot of reports built, but we really do truly see the value of having that single source of truth with all the data that does flow in there. We can get a full view of the member through M360. It's taken us a lot of years to get to where we are now. And one of these ways, as stated, is through Profit Magnifier. So we have files that we generate from M360 that feed into Profit Magnifier. And then after the program is ran, we then take those profit amounts and bring them back into M360. This is very beneficial because for reporting, so we're able to tie the profitability of both members and products into our reports. So if we write a report and somebody wants to measure profitability, we can easily tie that into the report. This really allows us to dig deeper into that member relationship at the credit union and do additional analysis. So I'm going to get into now a little deeper into our VIP program. This is our members rewards program. So it really rewards our most profitable members. And I like that this really ties into Jean's strategies, especially the second and third. So part of what we're doing is adding more members that look like our most profitable. So the goal is to get those profitable products at the credit union. and deepen those relationships with our current members. And then we're also attracting more members to this program since it is desirable for our members. As I stated, by using our data warehouse, we're really able to get that 360-degree member view. We're bringing in core data, PSU data, spreadsheets, and other various data into this program and into our data warehouse. So we really had to use the profitability when this program was built to determine what our most profitable products are, and then how we want to write that into the program. So one example with the 4 C's, those are all integrated into the program. We identified those as profitable products, so those are built in. The member has to have a checking account in order to qualify for the program. We're able to always adjust this program as profitability changes throughout time, and really change it to gear towards profitability and what we want the member to have. There was a lot of time that went into the program. Just as you can imagine, it's very complex. So different transaction data, statuses, different account types. We measure, let's see, total interest paid, average daily balance. So just a lot that goes into this program. Next, I'll talk about the triggered marketing, as Alicia touched on. So this is really to retain our new members and welcome them into our credit union. So it starts out with the onboarding process. So we have an onboarding file built through our data warehouse, and it pulls in all sorts of data. Join date, mail date, direct deposit, checking account, and all sorts of demographic information. So as you can imagine, there's a lot of fields in this file. We take this file and it's automated daily, and then triggered emails are sent based on this data. So our marketing area is able to select what they want to send, how often they want to send it, and really reach out to our members that way. As Alicia stated, there's welcome emails that are sent throughout the first year of membership. So that all starts with this file that's automated through our data warehouse. Some other things we're doing as far as triggered marketing, there's also a shares file, loans file, and a loan payoff file. So those are also used for automated emails. If a member pays off their loan, we can reach out to them right away based on this file and congratulate them on that payoff. In addition, we have 7 files that are generated daily, which are used for that predictive analytics. So to get that data, there's a total of 7 files. And again, a lot of information goes into those files. And finally, I'll touch on the branch reporting. We have production reports built in the data warehouse. And the really big benefit to this is, as I stated, just having all our data in one spot. For the production reporting, as you can see here, we're tracking business checking, consumer checking, loans, savings, and then some app information and credit card information. So instead of our reps having to go out to all these various systems to track where they are at compared to their goals, they're able to get that all from M360. It's all in one spot, coming from the core loan origination system and also from our credit card data. So that's a huge benefit to just ensuring that they can track their goals and stay on track. Again, the sales goals are around their most profitable products. As Alicia said, we don't want to sell unprofitable products. So tracking is a huge way to ensure that that's being done. The last thing I'll talk about is our indirect welcome, which is a newer process that we started. And this also starts with a file from our data warehouse M360, and it generates based on new indirect loans. So the file is exported from M360, and then I load it into a tool with our core, and it creates an activity for our reps to work. This activity basically reminds them what they need to do. They reach out to the members, welcome them, thank them for our business, and they also look for ACH to make sure automatic payments are set up, making the process more efficient for both us and the member. A lot of times indirect members don't even know that they're a member. So this is a way to connect with them and start that relationship. Ask for other business. Once this is done, the rep will close out this activity. And then what's cool is that we can pull a report back then from DNA Publisher tool to track and measure the success. We're able to see what was cross-sold, ensure that due diligence is being done, ensure that indirect members have their payments set up, and really get that connection with our indirect members. So it really takes it full circle. But again, that all starts with the data coming from the data warehouse. So with that, that's all I have. So I will turn it back to Denise for questions.
Awesome. Thank you so much. You guys did a great job. Ellen, Jean, Alicia, what valuable information. So let me take a look. Oh, we have some great questions. All right. So I guess, Jean, what are some of the results you've seen from credit unions utilizing your profit tool, and how quickly are they realized?
Wow, great question. And I think when we're looking at that, the things that you can do with the profit tool, like we had mentioned before, the different strategies, every credit union is unique in what they would really like to concentrate on to begin with on that. We typically find that people are most interested in member profitability for starters, because without your members, of course, you make no profits at all. So they want to find out more about that. And then from there, it usually goes into the finance area as well as marketing to find out more about the profitability of the products. And then from there, it can even get further into the operations of the credit union, where they can take a look at the profitability of their branches. So it's really it's more of a marathon. It's more of a long-term journey. And the credit unions that have really done well on this have taken kind of like baby steps to begin with, and like Ideal Credit Union, and that after a number of years, they're able to use it in quite a few different ways. So every credit union is different, but that's kind of the general things that we've seen as far as the evolution of this.
Okay, super. All right, thank you, Jean. And then let me see. I have a question, Alicia and Ellen, for you. Where do you see the most value from utilizing Profit Magnifier? I mean, I know there's a lot of different ways you use it, but maybe like the top 3 things.
Well, for me, this is Alicia Johnson. I have been in marketing for 33 years. And from my perspective, the most value comes in working with your CFO to identify the profitability. Profitability truly is owned by the CFO, and you want to have a good partnership with your CFO. Your CFO, I'm sure I wasn't here when we purchased the system, but I guarantee that Jean worked closely with Dennis in order to determine what the profitability was and building all the inputs in. And if they have comfort with the numbers that are in your system, the results will be that much more beneficial for the organization. I have worked for organization where 2 different areas fought about what was profitable. So I see that as the greatest benefit, and definitely one of the pieces that adds to the success at Ideal Credit Union. Another thing that we do with this profit information, and Jean mentioned that sometimes there are competing profitability systems. We do have an MCIF, and we actually pay more to pump in the profit resource information versus using their profitability information. And again, our CFO is very comfortable with that information. He goes to marketing as well as reporting to gather reports on profitability, and that shows the strength of the partnership in the organization. So those are two key benefits that I see and that I've really seen over the course of my career. Ellen, is there anything else you'd like to add in terms of profitability and the benefit that you see?
The only thing I can think of, as I touched on, is being able to, that comes to mind, is being able to add that profitability into our reporting. So if we have a report and we easily want to see what the members' profitability is in that report, we can just see that at the touch of the button. So that's been a huge benefit.
Oh, awesome. And then I guess, so another question I have is that's come up is, so Renee Rogers was asking about how to get additional information regarding Profit Magnifier. So Jean, can you put that slide back up? I don't know. For
Yes,
some reason
in fact, the reason I took it down was it has a bad email address for you. So
I saw Jean that we both have your email address.
Right. So
But we'll pop that back up, and also just so you know, the recording will be sent out, and we'll also be following up and sending everyone the presentation as well. So you'll get both of those things.
There you go.
So the other, I have another question about, sometimes, within the market, there's like a popular product that you hear another credit union has used and they've been successful. So let's say you go to a credit union, like a networking event, and somebody else has said, oh, our two top products are, A and B. Would that then apply that for like all other credit unions, if those two products would be what they should, hop on that bandwagon, or does it differ based on some other aspects of the credit union?
Yeah, that's a great question. And yes, it does. It differs very much, credit union to credit union. So the real keys with the profitability is the average balance that's associated with a particular product, or especially at the account level, and also how that product has been priced. So we see a lot of times some people say, well, I don't know if I really need to have a profit system. We'll just take a look at how large our loans are and how large our deposits are and kind of go with that. And that's a huge mistake, because you can have things where a particular product or an account is very badly priced. In fact, we see some of the least profitable members have some of the highest balances in the whole shop. So it really does depend. Credit union to credit union, there's not a blanket answer saying this is the best product for every credit union. It really does depend based on your data.
Okay, that's interesting. Yeah, because it's not like one size fits all. Hey, I'm going to send out auto loans to everybody because I heard my peers just had great success with that. So that's interesting. And then we have 2 minutes left. Just one quick question for you, Jean. How long does it take to get Profit Magnifier installed for my credit union? Is a question that came up.
With M360 data, it's much faster than we would typically do. We can get a system up and running within about 4 weeks, maybe 6 weeks of receipt of M360 data, which is unheard of in the industry. So
awesome.
Again, it's the standardization of the data in the data warehouse, and the common data model is just a godsend for us. So it does not take that long to do that, and we'd be glad to talk to people in more detail about that. But we do have a means of just generating a demonstration system for you at no cost to you. And again, we can be glad to share that with folks and what's involved with that.
Oh, that's awesome. Thank you. Yeah, one of the things I know that the credit union clients that we worked with together is the fact that you do offer that trial period, if you will, so that they can kind of see how it works and everything, which is pretty cool. Anyway, so I want to thank everybody for attending. Thank you so much, Ellen, Jean, and Alicia. But one quick exciting announcement for those of you who haven't heard, we are having the Trellance Annual Conference May 17th through the 20th at the beautiful JW Marriott in Tampa. And we will you'll be able to meet in person, both Jean and Ellen from today's call. There's going to be lots of great information. We're going to have breakout sessions. We're going to have great speakers. partners. We're expecting about 300 attendees, credit union attendees. And then to get a discount, you get a $300 discount on registration if you enter the code SPRING22. So capital S and then the word SPRING22. So you get $300 off that registration fee. If you have any questions about the conference, feel free to shoot me an email and we'll be happy to get information to you. So anyway, we appreciate everyone's time today. You guys did a phenomenal job, and we'll see you at the annual conference. Thanks so much. Have a great day.
Thank you.
Thanks. Bye-bye.